Is the decline of the US dollar as the world reserve currency truly inevitable? As we covered in our last video, in light of the inherent risks associated with paper gold investments, it's crucial for you to understand the implications of the impending decline of the dollar as the global reserve currency. In this video series, we will give you 10 reasons to invest in gold. There are far more to list, but these reasons cut to the core of gold investing. To learn about all 10 reasons right now, see the link in the video description to read the full article. When weighing the cost of living, inflation, interest rates, and the ever-growing national debt, it becomes more and more challenging to know if you are meeting your retirement goals. If you think that you may be falling behind, see the link in the video description to access the free inflation retirement calculator to make sure that you are on track. Also, be sure to stay until the end of the video, where we will give you 2 sound investment options, each with their own set of advantages. Reason number 2, de-dollarization. The decline of the dollar as the global reserve currency may be inevitable. Many economic experts, such as Bob Murphy, Jim Rickards, Brent Johnson, and Michael Every, disagree on the timing and the urgency of this concern, but one common agreement among them: gold will be the ultimate beneficiary. The euro-dollar market, that is, dollars existing outside the US, is quite large. Also, the network effect of the US dollar as a, quote, safe haven currency still holds sway, for now. With this in mind, the dollar's fall may be gradual but inevitable due to several factors. The BRICS nations, Brazil, Russia, India, China, and South Africa, as members, have already been trading commodities such as oil in their own currencies, not the dollar. The introduction of the membership of Saudi Arabia further threatens the US dollar's global reserve status and its dominance as the petrodollar. Furthermore, the original BRICS coalition alone share a global GDP that is now overtaking the previously dominated Western G7 nations. With the 2024 entry of the additional 6 nations, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, this will increasingly lead to a more bifurcated global economy and trading system, further isolating the dollar as a central bank reserve. As stated in the previous videos, building on the trend of de-dollarization, central banks around the globe are stepping up their gold holdings. This shift is largely a response to the diminishing purchasing power of their dollar reserves and what can be termed as a response to the weaponization of the US dollar. Irrespective of one's feelings and views of Russia's invasion of Ukraine in the spring of 2022, the resulting economic sanctions, seizure of foreign assets, freezing of Russia's currency reserves, and the punitive restrictions placed on Russia with the use of the SWIFT banking system created an atmosphere of uncertainty among Eastern Bloc nations. Moreover, this collective action by the G7 nations, more specifically the United States, has caused many foreign governments to further contemplate their participation in the dollar system, and has created an impetus for these non-G7 nations to further distance themselves from the dollar reserve system. As with the case of the Russian invasion and resulting sanctions, the prospect of being considered and dealt with as a pariah state in the eyes of the Western nations has the potential to transform any country's dollar reserves from a highly liquid asset to essentially useless pieces of paper. Hence, we see the continued accumulation of gold and the reduction of dollars and dollar derivatives of these foreign central banks. Gold is a time-tested and universal form of money that every country trusts. It cannot be inflated or be confiscated if held domestically within the country's central bank. This provides security. Therefore, the mass purchases of gold are likely to continue throughout 2024, further pushing up the price of gold. Reason number 1, world central banks buying gold in record amounts. The US Federal Reserve's approach to increase the money supply and monetize the ever-growing national debt will in turn weaken the dollars being held by foreign national banks around the world. Given this fact, countries with sizable dollar reserves are increasingly converting their reserves into tangible assets such as gold. Nations like India, Russia, China, and Brazil are leading this trend by buying gold at an unprecedented pace, disrupting the balance of power between the East and the West. In years 2022 and 2023, central banks around the world have purchased more gold than any time in recorded history, according to the World Gold Council. In 2022 alone, central banks collectively increased their purchases by 152% to more than 1,100 tons. This was an all-time historic high. The council also expects this strong buying demand to continue into 2024. This mass increase in gold holdings and exodus from the US dollar as a central bank asset is not just isolated to the emerging and expanding BRICS nations. Polish and Dutch central banks within the Western nations are increasing their gold purchases as well. In 2023, the Polish central bank stated that they want to double their gold reserves to up to 600 tons. By amassing gold, these institutions are tactically positioning themselves to counteract potential losses that they perceive with the dollar in the medium and long term. If the smart money is buying gold for what they perceive as growing weakness in the US dollar, it only makes sense that the ordinary citizen prepare as well. This trend isn't just about hedging against inflation or economic instability. It's a calculated move to diversify reserves and reduce reliance on the dollar. Central banks are essentially returning back to the historic money status of gold, both as a form of diversification, a hedge against potential crises, and its scarcity of supply. Stated simply, central banks can't print more gold. The trend is clear. Central banks are no longer selling gold, they're buying it. They're reducing the supply on the markets, effectively driving up the demand and the price of gold. As the collective acquisition of gold increases and the reserve holdings of US dollars decrease among these central banks, this will gradually create increased inflation of the US dollar, as the existing supply will be exported from foreign nations back to the United States. Other international currencies don't offer a compelling alternative, as they are based on unconvertible fiat paper. The lack of a strong alternative accelerates this process of de-dollarization, leading to increased demand of gold and thereby weakening the dollar's position as the global reserve currency. Gold is the only true global currency that is accepted due to its time-tested trust and store of value. No other form of money has this legacy and has withstood thousands of years of countless economic cycles. Fortunately, this move away from the dollar will be gradual, which buys time for the ordinary investor. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring that all these investment principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the links in the video description to access the free gold investment guides from these companies. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. If you have $100K of retirement savings to protect and want to take advantage of the best volume prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.